Hey everyone, welcome back to Corporate Decoder, the place where we break down the money secrets of big companies. And boy, do we have a financial feast for you today from Delaware Group Equity Funds V. Talk about a mouthful, right? But stick with me because beneath that formal name lies a treasure trove of numbers that tell a story. So, what is the big picture here? We're diving deep into the financial health and strategy of these funds, looking at how they performed, where their money is going, and what it all means for investors. Think of it like peeking behind the curtain of a massive investment operation. Alright, let's get into what is really going on. This filing a report to shareholders gives us the inside scoop on how these funds have been doing over the past year, ending the 30th of November 2025. First up, let's talk about the Nomura Wealth Builder Fund Class A. They reported a total return of 8.93%, excluding any sales charges. Now, that might sound pretty good, but how does it stack up against the market? The S&P 500 index, a big marker for the US stock market, saw a return of 15%. Their blended benchmark, made up of typically 60% S&P 500 and 40% Bloomberg US Aggregate Index, returned 11.36%. So while they did well, it seems they lagged behind the broader market gains in one of their key benchmarks. And what were they invested in? Their top equity holding was Nvidia, making up a significant 3.57% of their portfolio. Other big names like Microsoft and Apple also feature heavily, which is pretty standard for a fund looking for growth. Now let's look at their financial condition as of the 30th of November 2025. Their total assets were a massive $839,632,140. On the flip side, liabilities stood at $4,480,756. This means their net assets were a healthy $835,151,384. That is a lot of money. Moving over to the Nomura Small Cap Core Fund, their net assets were a staggering $6,514,110,730. That is a huge amount of capital they're managing. But here is where it gets interesting. For the 12 months ending the 30th of November 2025, the Nomura Small Cap Core Fund class returned a negative 4.00%. Ouch, that is a loss. Compare that to the Russell 3000 index, a broad market index, which returned a solid 13.59%. This tells us the fund significantly underperformed the market. The report blames this largely on lack of exposure to lower quality stocks, which led the market rally starting in April 2025. In simple terms, they missed out on a rally because they weren't invested in the riskier, but more profitable, stocks that were driving the market up. Looking at their top holdings, Semtech was their number one equity holding at 2.07%. They also had significant investments in Travere Therapeutics and Federal Signal. Then we have the Nomura Small Cap Value Fund Class A, which also saw a negative return of 1.99% for the same period. This fund's benchmark, the Russell 2000 Value Index, returned 3.02%. Again, the fund did not keep pace with its benchmark. The report mentions weak stock selection in materials and underperformance in healthcare equipment and supplies as key detractors. Their top equity holding was Webster Financial at 1.95%, followed closely by Axis Capital Holdings and FNB. For both the Small Cap Value Fund Class A and Class R, the fund net assets stood at $3,658,857,424. That is a considerable chunk of change. Interestingly, there was a change in their accounting firm. PricewaterhouseCoopers LLP was dismissed as the independent registered public accounting firm, and Cohen & Company Limited was appointed. This kind of change can sometimes signal a shift in how the company is handling its finances or compliance, though the report states there were no disagreements with the outgoing firm. Looking at the accountant fees, the audit fees for 2025 were $130,000, an increase from $108,500 in 2024. This isn't a huge jump, but it is worth noting when comparing to other expenses. Now, something really significant happened regarding leadership and strategy. The board considered and approved renewal of the investment management agreement with Delaware Management Company and sub-advisory agreements. This happened around August of 2025. What is notable is that they were preparing for an acquisition by Nomura Holding America Incorporated. The report talks about anticipated benefits to shareholders from this change in ownership, like access to Nomura's global asset management resources. This acquisition became effective the 1st of December 2025, which is right at the start of the next reporting period, and led to the funds being renamed. It shows a company actively managing its structure and future. Looking at the financial highlights for Nomura Wealth Builder Fund Class A, the net asset value per S-Share started at $15.85 and ended at $16.29. That is a decent gain in NAV per S-Share. Their total return was 8.93% while they did grow. Remember, the S&P 500 index grew by 15% in the same period. So they're growing, but maybe not as fast as some of the bigger market players. Their top holding, as we saw before, was Nvidia, representing 3.57%. This shows a heavy bet on a single tech company, which can be a double-edged sword. Big gains if Nvidia does well, but a big risk if it stumbles. Overall, common stocks made up 56.19% of their portfolio. They also had significant investments in corporate bonds at 14.29% and exchange, traded funds at 9.40%. This diversification is good, but it is the concentrated bets like Nvidia that really move the needle. For the Nomura Small Cap Core Fund Class A, the picture is different. Their total return, including sales charges, was a negative 9.51%. That is a considerable loss for investors. Even excluding the sales charge, the fund returned a negative 4.00%, significantly underperforming the Russell 2000 index's 4.09% gain. The report points to being underweight in lower quality stocks that led the market rally, meaning they missed out on a significant market upswing by not holding those riskier, but ultimately profitable stocks. Their portfolio is heavily weighted towards common stocks at 99.03%. This suggests an aggressive growth strategy, but with the negative returns, it clearly didn't pay off in this period. The fund's net assets were a massive $6,514,110,730. Despite negative performance, they are still managing a huge amount of money, indicating a large investor base. An important highlight is the change in their auditor. Cohen and Company Limited is now their auditor, replacing PricewaterhouseCoopers LLP. As mentioned, no disagreements were reported, but an auditor change can sometimes warrant closer attention. So, what is the takeaway from all these numbers? These funds are navigating a complex financial landscape. Some, like the Wealth Builder funds, saw decent growth, but often lagged behind major indices, showing they might be a bit too conservative or perhaps too concentrated in certain stocks like Nvidia. Others, like the Small Cap Core Fund, experienced significant losses, largely due to missing out on a market rally driven by lower quality stocks. The change in auditors, while seemingly routine, does add a layer to consider. The acquisition by Nomura and subsequent renaming of the funds also signals a significant strategic move, potentially bringing new resources and a new direction. The key for investors will be to watch how these funds perform under their new Nomura branding and whether their strategies can adapt to market shifts, especially in capturing growth from a wider range of stocks, not just the big established players. That is our deep dive into the latest filings from Delaware Group Equity Funds V, or as they're becoming the Nomura funds. It is a look at how big investment plays are made, adjusted and reported. What are your thoughts on these performance numbers and the strategic shifts? Let us know in the comments below. If you found this breakdown helpful, give us a thumbs up and subscribe for more decoded corporate insights. And remember, our Discord community is always open for more discussions. Link is in the description. Thanks for tuning in, and we'll see you on the next episode of Corporate Decoder.